Welcome to the show, and I'm thrilled to have me today, one of the world's foremost experts on pricing. It's Mark Stiving. Hello to you, Mark.
Hey, Rob, how are you today?
We're fantastic. It's COVID times, but there's lots going on, and we've got an action-packed episode I want to get through to you today and ask you some difficult questions. So just before we get on to that, give the listeners a little bit of a feel for your background and your areas of expertise, would you?
Sure. I've got a very eclectic background, which I think in a lot of ways makes me a really interesting or good pricing person. I started out as an engineer. I understand technology relatively well. I became a salesperson and I was horrible at sales, let me assure you. But having experience in sales helps a ton when you start thinking about pricing. I became a professor for 4 years. That was pretty fascinating. I got to teach pricing, create pricing courses. I became an entrepreneur, started a company, sold a company, became a director of pricing at some major corporations, became an instructor for pragmatic marketing who teaches product managers how to do their job, how to create great products. And then a couple of years ago, I left all of those roles just to start my own thing again. And all I do now is teach companies about pricing and value.
Why does pricing matter?
Sorry.
Why should people care about it, Mark? Tell us.
Oh my gosh. So think about any business, doesn't matter at all. Any business, your company, its job is to create value for the marketplace. So you probably spend 90, 95, 99% of your time figuring out how do you do more for your customers? How do you create more value for your customers? And pricing is that single thing that turns value that you create into revenue in your pocket. If you don't understand pricing, then it's really tough for us as a business to make money, to stay in business.
Okay, I get that. And there's different kinds of pricing. We're going to talk about value pricing as a bit of a deep dive today, value-based pricing. But can you just give us an overall view of the landscape of the different kinds? I guess you could start with a billable hour. I work for this long, you pay me this much, and this is my hourly rate. That's pricing 101, isn't it? But we branch out from there. Just paint a picture for us.
Yeah, if we're going to focus on accounting firms for a second,
Yeah.
which is totally fine, then the billable hour is probably the single biggest thing that is, or most common thing that's used.
Yeah.
I would lump that in with something that I call cost plus pricing.
Okay.
There are really two big schools in pricing. One is value-based pricing, which is I'm going to charge based on, I define it as how much my customer is willing to pay me. And the other side is cost plus pricing. I'm going to take all my total costs and make sure they get covered. And so if I'm going to bill myself out at $200, or if I think my time is worth $200, I want to make sure every hour I spend, I'm getting paid for that money. That's my cost. And so therefore I'm going to charge my customer my cost plus my margin. And usually my own $200 has that margin already built into it. And so I would say those are the two basic types of pricing that we think of. Now, there are other models. The model that's coming out really popularly right now is subscription-based pricing. But even subscription-based pricing, you could break that down into, am I thinking of it in terms of value-based pricing, or am I thinking of it in terms of cost plus pricing? How do I set those subscription prices? It's really a pricing model. It's not like thinking of retail versus direct sales, right? It's still, am I going to do cost plus or am I going to do value-based pricing?
Yeah. And you work with all kinds of sectors, verticals. Do you get a sense that the accounting professional or professional services that are so entrenched with the billable hour are any different to any other sectors, or is it all the same when you talk about pricing?
I think every sector is different. Every sector has their own unique problems that they deal with.
Right.
The biggest problem that accounting firms or lawyers or anybody who's a professional services type firm has, they don't understand pricing. They know they want to get paid for their time, and they don't really understand what does value mean? What's the value of what I'm delivering to my customers and how do they perceive that? The really easy answer for them, oh, I charge by the hour. They know they're not going to lose money if they charge by the hour. It just is, there's just so many reasons why that's the wrong answer.
Well, let's talk about value for a moment, because the problem is with the word, it's so subjective. You can't often touch it or measure it. Everyone values things differently. We're not selling cups of coffee here and commodities. We are selling services and different projects. So I guess accountants get scared about the whole value concept. So how do we define terms here?
Yeah, when I think of value-based pricing, I define that phrase as charge what your customers are willing to pay. Now, that's a really simple thought. It's just super hard to do. Then when you start thinking about value, what does value mean? Well, value could mean what my customer is willing to pay, because that's how much they value my service, my product. They're willing to pay me this much money. On the other hand, value could mean what's the economic value? How much additional profit when I buy your product? How much additional profit or how much cost do I save because I've purchased your product? And you could think of that as the economic value or the overall value. In the world of B2B, which accountants work in all the time,
Yeah.
in the world of B2B, it's pretty easy to be able to easy. Okay. Sorry, I said easy, but it's pretty straightforward
Yeah.
to say, if I can do this for you versus you having this happen, here's how much money you're going to make or save because of this activity.
Okay.
And so in my mind, B2B pricing is all about how much money am I helping my customer make or save.
So why is it that value-based pricing has been talked about for so long, particularly in professional services, but so few firms have actually had any success implementing it?
I would, although I don't really know the answer to this question because I don't work closely with tons of accounting firms, but I would say that companies have a really hard time with value-based pricing because they don't truly understand what value means and they haven't taken the time to get pricing. There are lots of nuances to what it is that we're talking about. The very first nuance that I'll give you, when we think about value, our buyers typically make two different decisions. Let me start by buying a car for a second. Before you buy a car, you're going to say to yourself, am I going to buy a new car or not? And I call that the will I decision. Will I buy something in this product category?
That's binary, isn't it? That's a yes, no.
That's a yes, no. Am I going to buy a new car? Am I going to hire a new accountant? Am I going to hire an accountant to solve this problem?
Okay.
Right? This is a will I decision. After they've said yes to that, then they go on to say, okay, I'm going to buy a new car. Now, which car makes the most sense for me? What fits in my budget? I really like the Ferrari, but it's way out of my budget. I think the Mercedes is decent. I like the BMW, the Audi, right? And so now we're trying to compare which ones make the most sense for us. We're looking at price. We become much more price sensitive as we start to make that decision of which one am I going to go choose. Now, accountants' customers do the exact same thing. They have to say, am I going to hire an accountant to solve this problem? Am I going to hire a bookkeeper? Right? What am I going to do? And then once I say, yes, I'm going to hire somebody, then they go on to say, okay, which one am I going to go hire? When people are making just a will I decision, they're not very price sensitive. When people are making a which one decision, they're very price sensitive. Now let's assume an accounting firm has built a phenomenal relationship with a client. And the client says, hey, I've got this new tax problem I need to go solve. Could you guys tell me what it's going to cost to go solve it? They're probably not going to go out to another accounting firm to try to get this problem solved. They're just going to use you. Now you can look at what's the dollar value to that client if we solve this problem. And you should be able to charge as a price. I like to think of 10% of the dollar value of the solution, the dollar value of solving the problem, as a price that you could charge if you go and solve the problem, right? If they're going to hire you for that. And so let's say you're going to make them $10 million. What if you quoted them $1 million? That's a big number.
Yeah.
But if you're going to make them $10 million, why wouldn't they pay that? Now, as soon as they say your $1 million is way out of line, I think I could do this for 20,000 at some other accounting firm. Now they switch to a which one decision. And we have to think about, well, if they're going to pay 20K for another accounting firm, what would they pay us? Because we already know them. They trust us. We built a relationship. Would they pay us 25K, 30K? Probably. And now we don't get to charge the $1 million anymore because
Mm.
they're going to make a which one decision, not a will I decision.
I see. That's very helpful. The problem that accountants have in some ways is they've got to unlearn the billable hour, which has governed our world for so long, in embracing a new way of doing it. So it becomes a mindset and a culture thing, doesn't it, as much as anything?
Oh, absolutely. The idea of go talk to a CFO in any major company,
Yeah.
and their mindset is about, I've got to make sure I cover my costs.
Yeah.
If I've got hard costs, there's no way I'm going to sell my product below those hard costs. And in a lot of ways that makes sense. But the way they protect that is they say, let me take my costs and make sure my margin is at least 30 points or 50 points or whatever it is that they want, and say, this is what my new price is going to be. And the problem is we have to think about those costs as, I think of it as a price floor. I want to make sure I cover those costs, but that's not the value my customer is getting. My customer is willing to pay me for the value I'm delivering. Let me charge based on that instead of based on my costs.
A mentor once said to me that most people in life can tell you what they don't want, but very few people can tell you what they do want. So how hard is it for clients to ascertain how valuable something is that's being put to them, let alone the accountant that's putting it to them?
I think it's pretty hard. There's a technique that I learned from actually I learned from a whole bunch of different people, and I've tweaked it and made it mine. But it's called a value conversation.
Okay.
And a value conversation is, now we're going to talk about a salesperson and a customer.
Right.
And let's assume in an accounting firm, I've got a salesperson who's selling to a client. What's a value conversation look like? It says, well, what's the problem that you're trying to solve? What are some other problems you might be trying to solve? What do we think the outcomes might be? And we start to get this big, long list of things that we're hoping to get accomplished by this engagement. And then we ask them, okay, out of this list, which one's the most important? And they say, oh, it's this one. Oh, how do you measure that today? Oh, we measure it using, whatever the number is. So I'm going to pick something that's off the wall. So let's talk about employee satisfaction. Totally off the wall, right? I care about employee satisfaction. I want my customers to be happy, or my employees to be happy. And they say, or we ask them, how do you measure that today? And they go, oh, we do an annual survey. Oh, and what's that come out to be? Oh, it comes out to be about a 7 out of 10. What do you think we could get that to? Well, so I'd really like to see it be a 8. 8 out of 10 would be a really good one. We say, well, if we could get it from a 7 out of 10 to 8 out of 10, what does that do for your company? Oh, it probably lowers turnover. Excellent. And now we can use our business acumen to help them calculate what's the dollar value of the turnover that we might reduce.
Yeah.
Now this has everything to do with our salespeople understanding our customers' business and their problems. Do we have the business acumen to do that? And accountants should.
Yeah, I see that. That's really clear. So value pricing, that value conversation is about an absolute external client focus, spending time understanding and quantifying the pain of their challenges, comprehending what's of real value, designing some valuable solutions. Does that then mean, Mark, that the timesheet, those internal productivity metrics, cost structures, do they have less relevance now?
They certainly have less. I'm sorry, go ahead and say that again, please.
Do they even become redundant?
Yeah, they have less relevance. I'm a huge fan of Ron Baker. I listen to Ron Baker a lot, and every accountant probably knows who Ron Baker is.
He's been on the show. He's quite the guy. Yes.
Yeah, he is. And here's one place he and I disagree, which is interesting. I think the timesheet is totally useless for billing our customers. But I think it has use, it has value in understanding or learning what does it take for us to be able to deliver something. So let me put this in terms of physical products for a second. We'll make a car, right? I'm going to go build a car. I want to know what my bill of materials costs are so that I know I'm not selling my car below my costs.
Yeah.
Now, it may be that nobody's willing to buy it at my cost. And so therefore I got to get out of that business. but I need to know those costs in order to make those decisions. In the world of accounting, what do you sell? Well, we sell solutions, of course, but those solutions are made up of hours of people. What's your cost to sell that solution? Did you make money on that or didn't you make money on that? I think timesheets are useful in tracking retrospectively what were our costs. So the next time we bid a project that looks like this, do we have the information we need to make a good decision?
Mhm.
But it shouldn't be used in terms of billing.
Fair enough. That makes sense. So is it a case of communicating the value that you offer to clients or teasing it out of them so they articulate it for themselves when you value-based price?
The best salespeople get customers to do this on their own.
You keep
A lot
saying
of
sales,
companies,
and you know that accountants hate that word, but yeah, I take your point.
you got to go sell your product. I don't care
Yeah,
who you are,
yeah.
right?
It's a
In order
dirty
for
word for
somebody to
them, Mark,
buy.
though, isn't it? Because they're professionals and they're above that, and we shouldn't have to sell. But yeah, if you don't sell, there's no revenue. So fair point.
Okay. Let me, I'm going to change my phraseology to the consulting accountant.
That sounds good. They like that.
Right.
The trusted advisor.
The trusted advisor.
Yeah.
So here's what's funny. And I always come back to products because I love making analogies between products and anything we talk about because
Yeah.
that's so true. And that is, if you have a product and I ask you, hey, how much is this worth to you? You actually don't know the answer to that question. And yet, if I take this product and I say, how much is this product worth to you? I don't know the answer to that question
Yeah.
because I don't know your business and you don't know my product. Together, you and I can have one of those value conversations where together we can figure out what's the value of this product to you, but neither of us can do it on our own. That's the conversation we need to have on a regular basis.
Mm.
Many companies create what they call an ROI calculator, and the customer gets to put in their numbers and then outspits an ROI number or a profitability or something. And let me assure you, customers who use those don't trust them. Right? I put in these numbers and you tell me I'm going to make another $10 million. I don't believe you. But if you sit down with me and let me do the math and walk me through the business acumen, and we're using my numbers as we go, but you're not telling me anything, you're just helping me figure it out. Now I believe you because I did all the work.
Yeah. And is contingency a part of value-based pricing? Let's say you promise me an uplift of $10 million and we agree on an amount to pay for that, but we don't hit that. Whether you were wrong or I didn't do what you told me to do or something falls through, there's so many variables. Are there contingencies?
I define value-based pricing as what is a customer willing to pay. Now, how do we get at that is a different question. And part of what you're asking is the question, what are we going to charge for? This is something that has come out pretty big as we start switching to subscriptions or companies start switching to subscriptions. The pricing metric is what is it that I'm going to put on my invoice to you? Your pricing metric as an accounting firm in the past has always been hours. How many hours do I sell you? And that's the pricing metric.
Yeah.
It may be in subscriptions that I'm just going to sell you at a monthly fee and you're going to pay me $10,000 a month or whatever it happens to be. Or my pricing metric could actually be a percentage of the results we deliver. We have to decide what pricing metrics make the most sense for our customers and for us. Now, I have to say, taking a contingency fee in most cases is really, really hard.
Okay.
Because there's typically an argument over you didn't really cause that. You didn't save me that money. Sales had a fantastic year this year, and they're the ones who went out and performed. It wasn't my accountant who made that happen.
Hmm.
So there's often this argument over how much money did you actually make?
Yeah. What
If you think
control or
about,
influence did you have over that outcome?
yeah, if you think about a lawyer and they take a contingency fee on the outcome of a trial,
Yeah.
that's a no-brainer, right?
Yeah.
Because there's no argument. You just made $1 million. We'll take our 30% of that or whatever the number happens to be.
So in value-based pricing, should we be focusing on the deliverables that we give to the client or a certain outcome or result that we promise the client?
Yes, you
Or
should.
a mixture of both?
Yeah. So we're back to the question of the pricing metric. What are we going to charge for? Most people would like to buy based on outcomes, but as we just decided or just discussed, sometimes that's really, really hard to do. I like to work with my clients, doesn't matter who they are, and figure out what I call a value metric. And a value metric is, how do my customers value my products? And maybe there's more than one, but I always ask them to fill in the following blanks on this sentence. I really love your company because my blank went from blank to blank. My customer satisfaction survey went from 7 to 8. My overall profit margin went from 4% to 4.3%. Right? I think of that as a value metric. That's how my customers are saying, here's how I value what you do for me.
Yeah.
Then what we need to do is find a pricing metric that's as highly correlated with that as possible. Could I charge a customer based on the output of the customer satisfaction survey? Well, my guess is that they don't want to pay me based on that. And so I need to find what are the things that I can charge them for that are correlated with the results they expect to get. It's not a trivial task by any means.
No, I understand. So is it possible to value price for anything? I'm thinking of an audit. It's such a defined thing. It's almost a commodity. And you probably realize that in the accounting world with automation and technology, it's much easier to do an audit now than it was 10, 20 years ago. It's almost, and not to trivialize what accountants do, but pushing a few buttons. So can you value price compliance, stuff like that? Or is value pricing just for the project and the consulting, the advice type offering?
You can absolutely value price it. So I want to go back to the original definition of value-based pricing.
Go on.
Charge what a customer is willing to pay. Now, if an audit is a commodity, and by the way, there's no such thing as a commodity, okay? But if an audit is commodity-like, there's a lot of competition involved there. Then here's what's going on. If they don't buy from me, they're going to buy something. Who are they going to buy from and how much are they going to pay? What do I do that's better than that other firm? And can I charge more for that because my customer values the things I do?
Yeah.
Maybe I'm faster. Maybe my reports are prettier, right? Maybe the SEC likes me better, or whatever it happens to be. There's some value that I might have that I could charge more for. But what if I charge the exact same price as my competition and I can do it in half the time they do? Right? From an hourly basis, I just made a lot more money than they would have.
Yeah.
But from a value perspective to the customer, how much is the customer willing to pay? And that's always what I think about when it's value-based pricing. Every pricing project, every pricing job always starts out at, how is the customer thinking about buying the product? Right? What's the decision they're making?
Why is there no such thing as a commodity, Mark?
Okay, so that might be a slight exaggeration, but take it as fact, right? I could give you an example of a commodity. If I'm going to buy pork bellies on the commodity exchanges, that's a commodity, right? There's no difference because I don't get to choose. I'm just buying pork. But I'll give you a great example. You think gold's a commodity, probably.
Yeah.
Go to 2 or 3 different places where you could buy a gold coin and have it shipped to you so that you can store it for the value of that gold. And I will guarantee you the exact same gold coin is different prices at those different sites. Why is that? Well, because some offer better service. Some have a better relationship with their clients. Now, it may be that I don't get to charge a lot more, but I get to charge a little bit more because of who I am, because of what I do. If you think of yourself as a commodity, then essentially what you've done is you've just given up all pricing power. You've given up all creative thought. And what you should be doing, instead of thinking of yourself as a commodity, is thinking, what else does this customer really need that has value to them so that I could offer them that and charge them more money?
Hmm. Talk to us about the journey that people like accountants would take in becoming a good value-based pricer, because this doesn't happen overnight, does it? With help from people like you, they get used to having these grown-up conversations, leading the engagement, asking the right questions, positioning and pricing things properly. And that's a mastery thing. This is not watching a YouTube video and cracking it overnight, is it?
No, it's probably not. And the thing that scares me most about moving away from hourly pricing towards value-based pricing in any type of firm like this is, what if you don't know how much time it's going to take?
Hmm.
What if you don't know what your price floor is, or what your overall cost is going to be for this project? It's possible that we bid it out at a price much lower than our costs, and now we're losing money. And that's a bad thing. My recommendation would be, if you're going to try to switch from hourly to value-based pricing, is to start with finding a few things that you do that are relatively repeatable. You understand how much time it tends to take. And then you can start to say, instead of me charging the customer by the hour, I'm going to say, well, what if I just offered you the solution and here's the overall price?
Hmm.
Now, by the way, your customers love this. You know, your customers don't want to pay you by the hour because they don't want you to go bill 100 hours for something that should take 50. They want the price certainty. I went to a car dealer the other day, and they had, there was a sign on the counter that said, hey, we'll replace your battery for $169. And that got me thinking. You know what they didn't say? We'll sell you a battery for $75, and then we'll charge you $75 an hour to put it in your car. Because now I have no idea what it's going to cost me to get my new battery put in. But they just said, look, we've done 1 million batteries. We know what it costs us. By the way, once in a while, it may take longer and we may lose money on a car when we change out a battery, but that's once in a while. And that's okay. That's, it's not a huge deal, because overall, or on average, we're making a lot of money. So I would be thinking, what are those things I know, I understand, that I do quite often? And can I put a dollar value on those and sell those?
And that comes with mastery. It comes with experience, doesn't it? It comes with doing it before and then seeing the patterns.
Absolutely. I think it's really hard to do value-based pricing if you're a brand new accountant trying to price things.
Yeah. So you've hinted at these, but are there any risks or downsides to value-based pricing, either for the accountant or the client that they're selling to?
I would say the biggest risk to the accountant is, if they don't understand their business well enough, it is very possible that they end up losing money.
Yeah.
But that's pretty unusual. Most firms don't do that. I would say that is our biggest risk. From a client perspective, there's pretty much no risk whatsoever, assuming that you as an accountant deliver on what you committed to. Because they've got price certainty. What we just did when we went from hourly to value-based pricing is we just shifted the risk from the client to ourselves as an accounting firm. And now, by the way, we should get paid for taking that risk. Customers should be willing to pay us a little bit more overall for the job, knowing that they're going to get the solution and this is the price. They've got price confidence.
Yeah.
By the way, one more thing I haven't mentioned, which I think is hugely important when we switch to value-based pricing. I think the single most powerful pricing technique any company can use is good, better, best pricing. How do you do good, better, best pricing when you're pricing by the hour? Right? Oh, I'll do better work if you pay me this much. But as soon as you switch to value-based pricing, now I can put together packages that says, Oh, you want my mini audit? Okay, I'll do this much. Oh, you want my normal audit, my better audit? I do this much. Oh, you want my best audit? Guess what? It includes. It includes all this, and I do this much.
Hmm.
And now I can put together packages for customers, and they get to choose.
And you're talking there about an optimal number of pricing choices to offer a client, right?
Absolutely, the optimal number is almost always three.
Hmm.
Almost always three.
Because, as they say, a confused buyer never buys, and too many alternatives, it just paralyzes people, doesn't it?
Yeah, so that's called the paradox of choice.
Yeah.
And the reason three is such a great number is because most people are going to choose the one in the middle.
Hmm.
Most people are uncertain. They don't really know what they need or want. They're afraid to buy the cheapest one because they think it might not be good enough. They're afraid to buy the most expensive one because they think they might be throwing money away or wasting money. So most people buy the one in the middle. And knowing that, we can create our packages
Yeah.
so that we make decent money when people buy our package in the middle.
And does lifetime value factor into value-based pricing? We seem to be in the moment here. Here's what you're getting. Here's the project, if you like, over this time period. But there are long-term benefits of a certain solution potentially.
Sure. Lifetime value is always an important factor. What we want to be thinking about as business people is, what are the decisions we're going to make today? And are we going to make a short-term decision, or do we want this to be a long-term decision?
Right.
Let me not even bring up subscriptions. In subscriptions, lifetime value is crucial to be thinking about. But even in non-subscriptions, as an accounting firm, I would be willing to do a project at a really aggressive price for a brand new customer because I want to get my foot in the door. I want them to see how well I work, build a relationship with them. And then as more and more projects come in, I could probably charge higher prices. Think of it as higher margins to us based on what we think it's going to cost us over time. And that's because now we've sold more certainty to our customer, and our customer is probably willing to pay us more. So yeah, I'd be absolutely thinking about lifetime value of a customer. And would I do a project at a very low price, very low margin, even for free, just to get my foot in the door of a big client?
Yeah.
If I thought that was going to get me long-term business, sure.
Yeah. This is great, Mark. I'm just going to finish with a nice, easy question for you that I've got from one of my listeners. They said to me, ask Mark, can price effectively combat inertia? If so, how do you effectively raise prices over time while still retaining a value proposition?
Can you tell me what you think that means? Can price overcome inertia?
If people don't want to buy, does the price then become so low that it becomes a no-brainer to buy? That's what I understand by that. At which point, after they've bought and they're going to buy it again, if you want to raise the price on that one while still retaining the value proposition, how do you do that?
Okay, got it.
That's the way I interpret it anyway.
Yeah, so I'm going to put that in my language for a second.
Yeah.
And my language would be, somebody's not buying in my product category. If I give a really low price, then can I get them to buy in my product category and then move the price up over time because they now understand the value and what they're getting? And the answer to that is sometimes yes, right? The thing to remember is, if somebody's not buying in my product category, it's the will I decision, right? Will I buy something in the product category? And I'll do this really easy with you. We brought up cars earlier, so let's go back to cars. Let's assume for a moment that you're not in the market for a new car. Rob, are you in the market to buy a new car right now?
My wife is actually, funnily enough. Yeah, she's looking at a new car.
Okay, so too bad. That's going to ruin my story, but let's pretend that she's not, if that's okay, right?
Yeah.
She's not.
I wish she wasn't, for that. Yeah.
Okay, so she's not in the market to buy a new car. And yet, by the way, what brand do you like? Give me a.
She likes the Range Rover Evoque.
Okay, so a Range Rover Evoque. So you're not in the market to buy a new car, and you get an ad that says, hey, 10% off a Range Rover Evoque. Do you think that changes your mind about buying a new car?
If you're not in the market to buy one, probably not. But if you're looking, then that would be a move the needle, wouldn't it?
Yeah, that's the whole point right
Yeah.
there. Is if Range Rover gives me a 20%, a 30% discount, I'm still not going to find thousands of euros, dollars, pounds, whatever it is we're talking about.
Mm.
I'm still not going to find thousands of those things to go buy something I don't want or don't need or don't think I want or need. And so when they're making the will I decision, price doesn't drive that decision. Something else is driving that decision.
Yeah.
My recommendation is to try to find a way to get them to really want the product. Now, if we think there are probably products where price could get someone to come try it, could get somebody into the category, then what I would do isn't lower my price. I would offer a one-time discount, an early bird discount, a limited time discount. I would do something that says, "Hey, come try it. The value is really 100, but I'm going to sell it to you for 50 because I need you to try it. I want you to know that it's awesome."
Mm.
And I think that's perfectly okay.
Yeah. That's really good. There's so much more I want to ask you, but it's going to take me a few months to digest even this because there's so much rich stuff here. And it is a bit of a mind scramble for people like accountants, isn't it? This is not a world that they're comfortable in having these grown-up pricing conversations.
Well, what's funny, Rob, is I've been doing this for 27 years and I still learn things,
Mm.
right? This is one complicated topic. There's so many different aspects that are going on. It is not surprising. Don't panic. But the easy answer is let's start with adopting some kind of value-based pricing.
Yeah. Mark, it's been terrific today. If people want to get in touch with you, learn more about the great stuff that you produce, the things you write, maybe get your consultation services, what's a good way for them to reach you and start a chat?
Easiest thing to do is send me an email, mark@impactpricing.com, or you can find me on LinkedIn. I'll accept any LinkedIn invitation.
Fantastic. That's great. I'm going to close with this. What advice would you give to the accountants, the professionals listening that want to be more value-based in their pricing, but are getting pushback from those skeptical partners who still want to go with the timesheets, still want to go with the old ways of doing it? But these younger people, if you like, I say younger, not necessarily, but they just want to move the dial and change the culture a little on pricing.
I'm a huge fan of taking small steps. Find the one project or the one type of project where you do it often enough. You're pretty sure what your costs are going to be. Start to put together a good, better, best solution to those types of problems and then offer them to clients and see what happens. I think you're going to find that it makes your clients happier. It makes it easier inside your company to manage it. Overall, it's a really easy and yet much more profitable decision.
Yeah. Mark Stiving, that's been world class. Thank you so much for your time and your insights today. It's been brilliant.
My pleasure. Thanks, Rob.
You've been watching or listening to the Accounting Influencers podcast featuring hosts Rob Brown and Martin Bissett with key interviews, what's working in the accounting profession, and news from the accounting and fintech world that helps you do your jobs better. We go out to 144 countries, over 20,000 unique listeners with 100,000 downloads, and it is accredited for continued professional education and development. Thank you for tuning in.